What if you could build a machine? A money-making machine that you own, that works for you 24/7, while you're sleeping, while you're on vacation, and deposits cold, hard cash into your bank account every single month. What if that machine could eventually pay you $1,000 a month, giving you the freedom to own your time? This isn't a get-rich-quick scheme. This is the time-tested power of dividend investing. It's how ordinary people build extraordinary wealth. And in this video, I'm going to give you the complete blueprint, step by step, on how to build a portfolio from scratch that generates $1,000 per month in passive, dividend income. Whether you have $100 to start or $10,000, the principles are the same. Let's build your money machine. First, let's break down our goal into simple math. $1,000 a month is $12,000 a year. To figure out how much capital we need, you must understand the most important metric in dividend investing: dividend yield. The dividend yield is simply the annual return you get from dividends, based on the price you paid for the stock. If you invest $100 in a stock with a 5% yield, you'll get $5 in dividends per year. Simple. Now, let's reverse engineer our goal. The formula is total investment equals annual income goal divided by dividend yield. This tells us exactly how big our money machine needs to be. Let's look at a few scenarios to see how this plays out. With a conservative portfolio of ultra-stable stocks yielding 3%, you would need $400,000 invested. This is a large number, but it's the safest path. With a balanced portfolio yielding a healthy 5%, you'd need $240,000. This is a very achievable goal for many long-term investors. With a high-yield portfolio averaging 7%, that number drops to just over $171,000. Now we're talking less capital, but slightly more risk. And with a very aggressive, income-focused portfolio yielding 9%, you'd need only $134,000. This shows the incredible power of focusing on high-yield assets. The key takeaway? The higher your average yield, the faster you reach financial freedom. Now, let's explore the two best strategies to build a portfolio that gets you there. Our first strategy is for the hands-on investor, picking individual dividend-paying stocks. The golden rule here is diversification. Never put all your eggs in one basket. A well-diversified portfolio should have 20 to 40 stocks across different sectors of the economy. Here are the core building blocks. Block number 1. The bedrock, dividend aristocrats and kings. These are the titans of the investing world. S&P 500 companies that have increased their dividends for 25 plus, aristocrats, or even 50 plus, kings, consecutive years. They are your portfolio's foundation, recession-tested and incredibly reliable. Think of Procter & Gamble, which has paid a dividend for 134 straight years. Or Coca-Cola. Their yields are modest, maybe 2.5 to 3.5%, but they provide unparalleled stability and predictable growth. Block number 2. The workhorses, high-yield powerhouses. These are established companies that offer a much higher dividend yield, often in the 5% to 8% range. They are your income accelerators. Look at telecom giants like Verizon or energy leaders like Chevron. But be careful here of yield traps, a dividend that looks too good to be true because the company is in trouble and might cut its dividend soon. Always check the company's financial health. Pay quarterly, but for our goal of monthly income, REITs are your best friend. These companies own properties, malls, apartments, data centers, and are legally required to pay out 90% of their taxable income as dividends. The undisputed king is Realty Income, trademarked as the monthly dividend company. Another popular one is EPR Properties, which owns movie theaters and amusement parks. Getting paid every 30 days is a huge psychological boost. Block number 4. The global diversifiers, international titans. Don't limit yourself to just the US market. Some of the world's best companies are international. Think of Swiss food giant Nestlé or the Japanese conglomerate Sony. Adding international exposure reduces your risk if the US market has a bad decade. By combining these 4 blocks, you create a robust, globally diversified portfolio that balances safety, growth, and high current income. But what if you don't have the time to research 40 stocks? That's where strategy number 2 comes in. The set it and forget it dividend ETF approach. An ETF, or exchange-traded fund, is a single investment that holds hundreds, or even thousands, of stocks. By buying one share, you are instantly diversified. It's the simplest, most effective way for 90% of people to invest. But not all ETFs are created equal. You need to look at their expense ratio, the tiny fee the fund charges annually. Look for low-cost funds, typically below 0.40%. Here are 3 of my favorite dividend ETFs for building a high-income portfolio. 1. The Foundation. Schwab U.S. Dividend Equity ETF, SCHD. If you could only own one dividend ETF, this might be it. SCHD tracks 100 high-quality, dividend-paying U.S. stocks. It's beloved for its strict screening for financial strength and its low expense ratio of just 0.06%. It offers a great blend of safety and a yield around 3.5%. 2. The Income Generator, JP Morgan Equity Premium Income ETF, JEPI. This is a different beast. JEPI holds stable stocks but also sells options on them to generate a massive monthly dividend. Its yield is often in the 7 to 9% range. It's a fantastic tool for boosting your portfolio's overall income, but understand that its growth potential is more limited than SCHD. 3. The All-in-One High-Income Machine, NASDAQ 100 High-Income ETF, IQQQ. This is for investors who want maximum monthly income. It invests in the top 100 NASDAQ companies and, like JEPI, uses an option strategy to generate a huge monthly dividend, recently yielding over 9%. You can even mix and match. A popular strategy is to use SCHD as your core holding and add a position in JEPI or IQQQ to supercharge your monthly cash flow. Theory is great, but action is what builds wealth. Here is your 5-step plan to launch your dividend machine this week. Step 1. Open a no-fee brokerage account. You need a place to buy your investments. In the US, opening an account with a major broker like Fidelity, Charles Schwab, or M1 Finance is free, has no trading fees, and takes less than 15 minutes. Step 2. Fund your account. Start with what you can. I mean it. If it's $50, great. The habit is more important than the amount. Don't wait until you have a large sum to invest. That day may never come. Start now. Step 3. Make your first purchase. Choose your strategy and pull the trigger. Buy one share of SCHD, or buy a share of Realty Income. Overcoming that initial fear is the biggest hurdle. Just do it. Step 4. Turn on drip. This is the secret sauce. DRIP stands for Dividend Reinvestment Plan. It is the most powerful wealth building tool at your disposal. When you turn on DRIP, your dividends automatically buy more shares of the stock or ETF that paid them. This creates the dividend snowball. Your first $5 dividend buys a tiny fraction of a share. That fraction now earns its own tiny dividend. It's a chain reaction that, over decades, becomes an unstoppable force of wealth creation. Step 5. Pay yourself first, automate everything. Set up an automatic transfer from your checking account to your brokerage account every single payday. Even $100 per paycheck adds up to $2,600 a year. This makes saving and investing your top priority, not an afterthought. Before we finish, a critical reality check. This is a long-term strategy, not a lottery ticket. The stock market is volatile. Your portfolio value will go down some years. Dividends are not guaranteed. That's why we diversify. The worst thing you can do is panic sell during a market crash. Remember the mantra: time in the market beats timing the market. Stay patient, stay consistent, and let compounding do its magic. So there you have it. The complete blueprint to building a $1,000 per month dividend portfolio. It's not about being a genius, it's about being disciplined and patient. The dream of financial freedom, of owning your time, is within your reach. The best time to plant a tree was 20 years ago. The second best time is right now. If this video helped you, please do me a huge favor and hit that like button and subscribe to join our community of wealth builders. It helps the channel more than you know. And now, for today's action step. Tell me in the comments below what is the first dividend stock or ETF you are going to research after watching this video. I'd love to hear from you. Thank you for watching, and I'll see you on the path to financial freedom.